All right, everybody, I wanted to make a quick video about how to get rid of mortgage insurance because I get a lot of questions about this and there's a lot of different ways to do it, but there's one that's really the best way. So keep in mind that on FHA loans, your mortgage insurance is stuck until you refinance out of that loan, except for a few small exceptions. So really talking about conventional loans only here. VA loans don't have mortgage insurance, so you don't have to worry about that at all. So on conventional loans, the theory is once you own 20% of your home, you no longer have to pay mortgage insurance. Mortgage insurance really is in place to protect the lender in case you default on their property. So on top of getting the house as collateral, they would get some type of insurance premium payment from the mortgage insurance company. But once you get to that 80%, after you've been making payments over time, you can remove your mortgage insurance. So I'm going to share my screen and we're going to go through a quick demonstration on what that calculation looks like, and you can see where you would be able to remove mortgage insurance. So we're gonna do a really simple example. So I'm gonna keep the numbers as simple as possible. We're gonna say you bought a $100,000 house and you did it with 3% down, meaning that your starting loan amount is $97,000. So your home value is 100,000 and your loan amount is 100,000. And so if you did nothing but make your minimum payments, this is what would happen. And the way when they will remove mortgage insurance is when, again, you've got owned 20% of your home. So what we want to do is, when would we own 20% of our home? So that means your loan to value ratio is 80%. If you own 20%, you have a loan to value ratio of 80%. So based on this, the loan to value ratio, they're just going to calculate based off the original value of the home. So once your loan balance gets to $80,000, you can remove mortgage insurance. You don't even have to call them, they'll just do it. And so let's see how long that would take. So if we scroll down till we get to 80% loan to value ratio, here we go. It would take 131 months, which is how many years? 131 divided by 12. It would take you 11 years of making your minimum mortgage payment before the mortgage insurance company would remove your mortgage insurance. But one thing you can do is you can use the appreciated value of the home. So your home, hypothetically, it should go up in value over time. As you see the actual home value, I have it an appreciation of about 6% in here. And we have an appreciation loan to value ratio. So if you take into the account the upgraded value of the home, so if you do things to your home like upgrade a couple of things, upgrade your kitchen, add a back house, whatever it may be, add a pool, all those things will go into adding the value of your home. But if you do nothing and the appreciation rate is 6% in your area, then your appreciated LTV would look more like this. And so with that, we'd be down to 31 months. So 31 divided by 12, so just 2.5 years. So what you have to do in order to get this to work, so this is without you doing any renovations, improving the value of your home physically, forcing appreciation is what we call it. Once you got to this number, you could call your mortgage insurance company and ask them to do a review. They'll do some type of appraisal, that either a desktop appraisal or a broker price opinion or a drive-by appraisal, something like that, and they'll confirm that your house is actually worth 117 now, or 117,898. 891. So that's one way you could do it. Another thing that you can do that I highly recommend for all my first-time home buyers, anybody who's paying mortgage insurance, is you're allowed to pay more on your mortgage than the minimum monthly payment. So this is just with paying the minimum monthly payment. If you're tight on your budget, even just $5 a month will help. But obviously the more you can do, so I would kind of push it a little bit, try and get to $20, $50, $100 a month more. And as you do that, you'll be able to get this shorter and shorter. Now there is a minimum time frame. You have to make at least 24 payments on your house before they will allow you to remove mortgage insurance. So if you say you're in a place with crazy appreciation, it's easier to do it. Let's say it's 15%. So you got to that 80% number in just 15 months. You would not be allowed to call your mortgage insurance company and say, hey, I own 20% of my home, remove mortgage insurance. They said you have to wait until you've made 24 payments. So once you've made 24 payments, that's when you can call. So if you've got a home, you're paying mortgage insurance, you've paid 24 payments to that mortgage company or on the same loan, it could have transferred between servicers, then you can call them and ask them to remove mortgage insurance. Again, they might ask you to pay a couple $100 to do some type of abbreviated appraisal, but that's essentially it. So ways I would try and speed this up, again, making payments on your house. If you do some kind of significant renovations, sometimes you can even do it before the 24 months. So if you do a whole remodel of the house and redo your kitchen and redo the backyard, all that stuff, you can call after a year and they can usually go out there and do a full appraisal and remove mortgage insurance, all that. But so reduce reduce your loan amount by paying more on your payments and try and do some improvements on the house. And you should be able to remove mortgage insurance within 24 months. Good luck.